about traditional mortgage, special mortgage programs, and with in-house and outside the box mortgages. Joe is the primary sponsor and founder of Talk Shop in Memphis. Anyone know how old we are?
Too old.
No, we're 22 years old, and Joe started it way back when, and is just a fantastic leader. Joe Garner also hosts the radio show Real Estate Mortgage Shop, airing on Mighty 990 AM 107.9 and streaming on KWAM. Her podcast and show notes are published on joegarner.com. In addition to the radio show, her real estate mortgage market reports are heard during the week over the airways and streaming over 130 stations across USA. We have a celebrity in our midst. Joe wrote the book, Choosing the Right Mortgage, The Quickest Way to the Life You Want, which hit the top 10 on Amazon for new releases under the finance category in 2021. You can pick up Joe's book on Amazon and Barnes & Noble. Let's have a huge round of applause for our leader.
Thank you, Lynn. Boy, that sounded pretty good. Like, wow. We have a lot of celebrities in the room. I mean, Greg Renfro has been a fearless leader for Memphis Area Association of Realtors, and we've done some fun things together. Richard Scarborough is a leader and a mentor. And I just can't say enough about Lynn and Becky and just everybody in here. I appreciate you coming today. Today, we're talking about roadmap to the life you want with the right mortgage. And I don't know if you guys have ever had a situation where you had your GPS take you to the wrong place. I'm sure there are plenty of funny stories, and I wish we had time to share them all, but I've heard quite a number of funny stories. But in the mortgage business, it's not as much about how much money you need as you need good directions. And people are looking for directions. They're looking to find the home that they love. They want a payment that they're comfortable making per month on their mortgage. And they want the whole process of buying homes and getting a mortgage to be less stressful with no negative surprises. Okay. But as they go through that process, some of the common barriers, roadblocks, if you will, that people run into is they'll say, well, and y'all heard this, I don't have enough money to close. The other one is, well, my credit's a little messed up. Sometimes it's more than a little messed up, but there's always a way to get there. Rates are too high or the payment's too high. I'm an investor. I need a special program. Or the property just needs a huge amount of repairs and there's something wrong with the property. So these are the barriers or common roadblocks. But there is a quicker way to the life you want. And if you know somebody that's on that real estate journey and you can see, I think they're headed down the wrong direction, please send them to me. I am so happy to listen to their story and try to direct them in the right way when it comes to the right mortgage, because mortgages are not one size fits all. And as a mortgage officer in the 30 plus years I've been a mortgage officer, I think the highlight of what keeps me in this business is being on a journey with somebody who has a big dream, but they've run into some obstacles and they're tenaciously trying to get over those obstacles. They can't seem to do it. But sometimes because of their own ingenuity, and maybe coupled with coming and talking with a good mortgage officer who says, I got a mortgage for that. A special mortgage, maybe it's a combination of mortgages that will make their dream come true, and being at the closing table with them. That's why I am still a mortgage officer after over 35 years. But I want to show you some examples of people who have run into roadblocks. Now, I've changed the names, I've changed some non-material details about the story to protect privacy, but these are real people, y'all. And I want to talk about the barrier, I don't have enough money to close. One of the memorable clients I had, I call him Joseph Jeffers. He called me up one day, I was sitting in my office, and he said, Joe, I've been through a horrendous divorce. He said, I have spent every dime I have trying to get custody of my 2 young boys. And he said, Joe, I didn't succeed. He said, I only get my boys every other weekend. He said, what I'm asking you to help me do is help me get a mortgage so I can buy a house where my boys will enjoy coming to spend their weekend with their dad. I'll tell you, that really got me. The man truly loved his boys. He said, I love my boys more than life itself. Help me. Okay, so for Joseph Jeffords, the answer for him was a combination of loans. We used a government low down payment FHA loan, but we coupled it with a down payment assistance product that gave him down payment assistance to cover that down payment. And he had a good realtor, we got some realtors in the room, who helped negotiate the sellers to pay some of the closing costs. And that left him some money to do things like build a tree house in the backyard. You know they're gonna love that, the kids. So that's what keeps me in this seat, down payment assistance. And I wanna say this to the people in this room, the people listening to this video, you don't have to be a first-time home buyer to get down payment assistance. There are several products available out there today that will help you with move-in costs. Well, my credit has some problems. Is your credit stopping you? There are so many things. In fact, in this book, Choosing the Best Mortgage, the Quickest Way to the Life You Want, there's a whole chapter on little things that you can do that will make a huge difference on your credit score really quickly. So if you hadn't gotten the book, or not, I'd like to, Lorraine, if you don't mind, if you can start passing that around. It's chapter 15 on the credit if you want to take a peek. But I can help people find a way to get their credit in line to buy a house or refinance. Well, my payment's too high. You know, there are a number of different programs today that will help people qualify, especially, let me use an example, the 2-1 buy down. What's a 2-1 buy down? Well, if you've got somebody who's in a situation where their income is going to be going up over the next few years, or maybe their huge debt's going to be going down over the next few years, the 2-1 buy down is where the seller or maybe someone pays a little extra money and they get that interest rate first year 2 whole points below what the market is. So that brings their payment down the first year. The next year it goes up 1 point. So the payment goes up a little bit, and then the third year it's back to market and fixed forever, unless they refinance. So remember that you can marry the house, you can date the interest rate. If rates go down, there's no prepayment penalty on these loans. Why do people refinance? People today, the biggest reason people are refinancing is because they are trying to get rid of this credit card debt that has zoomed up in the last few years from like 8 to 12% interest to like 25 to 28% compounded. And people have life happen to them. You know, ideally, if you're going to refinance, pay off your first mortgage and add in this 28% credit card debt, you really don't want to keep spending on the credit cards, right? But there are so many people that are at that place, and it's very rewarding to be able to do a refinance for them and get all of that debt into one single digit interest rate. I've seen people save regularly $900 to $1,000 a month at what they were paying out. And so what really makes me happy is when they say, you know, Joe, we've set it up to automatically pay $500 of this savings a month to prepay this mortgage so we can get this mortgage still paid down early. And now they don't have all that credit card debt on top of them. Number 2, and Richard Scarborough, Greg, Savannah, you guys know all of this. People will refinance, pull cash out so they can have money to buy additional property, income producing property, wealth building property. Number 3, cash out to improve the home. Sometimes people are modifying the home because they have a family member moving in or they're changing their lifestyle in some way. I want to tell a quick story about Sergio and Selena. I think this is one of Savannah's customers, but anyway, it's not their real name. But they were self-employed, and they had found the house that was going to be perfect for them, their family. They were so excited. They got their mortgage, they went to get their mortgage at their bank, and the bank turned them down and said, "You guys don't make enough money." Now, these people owned a very successful business. They were heartbroken. They were a little bit panicked. And so when they called me, Sergio said, "But Joe, we make plenty of money. We only write off expenses that we're legally able to write off," which was very true. But it made their net income look very small. They were trying to buy this big house. So for them, the best mortgage for them, we just pivoted them over to what we call is an outside of the box loan called a bank statement loan. We said, you know what? Don't even send us your tax returns. Send us your last 12 months bank statements. And we were able to track their cash flow based on bank statements. And he's right. They made plenty of money. They controlled plenty of money. So we were able to get their loan closed and have a celebration that closing that day. Let's go to Daryl Dason. Now, I love this guy. In the very beginning, he bought his own house, but he was in a group like Richard and I are in, a Memphis Investors group, and he had seen how people were making all this money buying homes. Now, they don't make it instantly, but over time, as you buy property right, you make some money. After a while, you've got a passive income. He said, Joe, how many minutes do I have? 10 minutes, okay. He said, Joe, I want to own enough property so that one day I can quit my 9-to-5 job and I want to live life the way I want to live it. Now, we've seen people do that. I mean, there's a guy right here sitting in the room that's done that. So Daryl Dason, after a while of owning some property, these traditional loans became very cumbersome for him because then he had to bring in a wheelbarrow full of paperwork on these traditional loans to show all the income and taxes and insurance and leases on his other properties. It's like, I can't do that anymore. I need something quick and something that's got a really good interest rate that will give me a positive cash flow. For him, the outside of the box loan was the investor DSCR loan. It's a wonderful loan if you know somebody or you are that somebody who wants to build wealth owning rental property. He only had to show income on that one property that we were doing. And we just got credit. We made sure he had some money to close and all of that. But DSCR is a godsend for investors who want to build wealth owning multiple rental properties. They also let him put the loan in his name of his business, his LLC, and they let him buy things like Airbnbs. I mean, traditional loans are like, no, you can't do that. But the SCR loan said, yes, as long as it's a good investment, we're going to do it. So want to talk about another lady, Colleen Kelsey. I call her Colleen Kelsey. Now, she was a young lady, and she had just gotten really started in her career. She made okay money, but she wanted to live in this one particular neighborhood in Midtown. And it was one particular little area, but she couldn't afford it. She didn't make enough money to qualify to buy the house in the neighborhood she wanted. And she told me, she said, Joe, I drive by there all the time. I'm always looking at them and dreaming. She said, but if I'm going to buy a house, I want to buy the house I want. I really don't want to start with something I don't really want. I want to buy in this neighborhood. Well, one day she was driving through there and she saw this house that had a new for sale sign in the yard. Now that house was not pretty. It looked like it was going to need a lot of work. In fact, but it was priced so low. I mean, really dirt low. She was like, something's got to be wrong with this house. So she took her dad and a friend of theirs who was a licensed general contractor over there, and they went through that house and they made a list of repairs that were going to have to be done. $40,000 worth of repairs. Okay, well, no traditional loan is going to touch that because that house was in such bad shape. So for Colleen, what we did was a renovation and repair loan for her. It's a special mortgage product that will allow you to buy a house and borrow the money to repair it. So because she bought it at such a low price, even when she added the $40,000 onto that loan for the repairs, she still was able to afford it, and the house was worth more than what she paid. So that was Colleen's creative way of getting in to the house that in the neighborhood that she really loved. big success story there. If you know somebody who wants to buy a house that just, I think they call them handyman specialists sometimes, there's a loan for that. Lastly, I want to share a story about a real special lady. I call her Miss Alba. Oh, Miss Alba. And she had been living in her big old house for 40-something years. She had paid it off. And her little friend that she played cards with was going to move to an assisted living. And she said, Alan, you want to buy my house? And it was in a low maintenance area, had an association fee and everything, but it was more expensive than Miss Alba's house was worth. And Miss Alba called me up and she said, Joe, I want to buy my friend's house. Honey, she said, I'm 80 years old, but I want to live in this house until I'm over 100. Give her an A+ for positive attitude. She said, my house is paid off, but I'm tired of doing the cleaning. I'm tired of doing the yard work. And honestly, I'm just tired of making payments, period. I don't have any mortgage payments. I have to pay the taxes and insurance. I don't know. Can you help? We looked at a couple of different plans, but the plan that really sparked it was the new, improved FHA home equity reverse mortgage. Now, she was going to sell her house, but if she got a $200,000 equity line, okay, equity line, reverse equity line, if that was at a 6% rate that year, Miss Alba would have made, she would have had an added availability of $12,000 that year that she could pay her taxes, her insurance, her association fees, go on vacation, do other things that this lady had on her bucket list. She's 80 years old, had on her bucket list, and never touch the equity line. Now, if you've heard bad things about reverse mortgages, I have too. But you need to check out, to call me, let's check out some of the new improved safeguards on these government reverse mortgages. That was the key for Miss Alba, so that she wouldn't have to jerk out all this money out of her regular income to pay taxes, insurance, association, and go on vacation. She used what she had available as extra on her reverse mortgage. So I've only got 3 minutes. So real quick, who do you know that wants to buy a home, maybe refinance, restructure? I want to do one-on-ones with realtors, builders, property managers, investors. And I really do. I hope you can get this book. There are so many more cool stories in there that may spark an idea of your own. It may not be your exact scenario, but it may spark an idea of your own that will help you or someone you know. So please connect with me. And y'all have any questions?
Sure, so
Richard?
I have the book, it's wealth of information. Thank you. Do you have any lenders that you're working with to do manual underwriting?
Manual underwriting. These outside of the box mortgages are manually underwritten.
Thank you.
Yes, sir. Good question. Anybody else?
Just a
Becky?
comment.
Go ahead. Lynn, go ahead.
Okay, just a comment on credit. Credit will determine whether you qualify for a mortgage, etc. Let me tell you, on the insurance, it can quadruple. Good credit from really bad credit, it can quadruple what you pay for your insurance. So Joe,
Check out
thank you for
chapter
what you do.
15. It will really show you how that deal works. Becky?
Just a tidbit. I had a girl call me and she was almost hysterical. She was crying. She's trying to buy rental property. She has one now. She's wanting to expand that. She had been given some really, really bad advice, and she was just to the point of signing her life away with paperwork. I asked her to give Joe a call. Joe's fixed her up, and she's happy that she.
Thank you, Becky. Thank you. Well, I really appreciate your time and coming out. And let's do a one-on-one. Connect with me at jogarner.com. Thank you. Well, since Carlin is on his phone, so what I'm going to do now is put my other hat on.